Hi there, my name is Irked, and this is my channel Get Irked, where I teach you how to invest for the long term. In today's episode, I wanted to talk about your investing edge. On other websites and other YouTube channels, you may have heard people refer to the edge. What makes you different as an investor or trader than everyone else? While some will say that it's important that you have a specific style, whether it's that you're able to play oversold 4-hour bounces or that you're able to identify undervalued assets, for me, I am a long-term investor, so my edge is different. My edge is three-pronged: patience, discipline, and time. What does that all mean? First off, as a long-term investor, you don't need to just jump right in. You can afford to wait until the asset is ready to be purchased. Patience. You can make sure that it's properly valued. You can wait and buy in stages on the way down. You can dollar cost average in. You have patience. Second in my edge is discipline, and this one might actually be the most important of the three. Key to discipline are to create rules that you will follow no matter what. For instance, I never sell on a red day unless there's stock-specific bad news. If there's a market sell-off or a sector sell-off, I do not sell. The time to sell was before, when the market was at all-time highs, when the sector was at all-time highs. That's when you take profits. Key to that discipline is to sell in stages. You have to take the opportunity to be able to take profits when you can. You don't have to sell your entire position. When I first started trading and investing, commissions were a flat $15. That meant every time you bought or every time you sold, you had to pay $15. As a younger investor working with smaller quantities, $15 really ate into my percentage. For example, if I was buying one share of a $100 stock, I would start off down 15% because of that $15 commission. Without commissions and with the ability to buy fractional shares, investors today do not need to go all in on their position. In fact, they shouldn't. If you follow my discipline, my approach is to not do that. I buy in stages. My initial buy will be anything from 25 to 50% of what I want as the total allocation, and then the rest of the money is going to be allocated to buying the stock on the way down. If the stock never goes down, then all I have is that 25 or 50% allocation. Again, sticking to my discipline. By having your rules set in advance, it will lower the chances that you'll second guess yourself. Now, make no mistake, every market-wide sell-off feels different than the other, and they all feel like the end of the world. When we sold off in December of 2018, nobody knew where the bottom was, and it was even worse in March of 2020. My discipline dictated that starting at the end of February of 2020, I started throwing money at the markets, and I did so all the way through March and into April. And I'm not going to lie, there were times where it just felt like I was putting tens of thousands of dollars into a bonfire just to watch it light on fire. However, I buy in stages. And even at the bottom, I still had more than 35% cash because we didn't know if the markets were going to sell off to 50% or further. I almost never have a full allocation in any position that I actually accumulated by buying it in stages. Most of the time, there's money on the sidelines for each position I hold, and I actually prefer it that way. For example, in my investments in play portfolio, my biggest position is Square. It's constantly exceeding the allocation target size, and I literally have no money in it anymore in terms of capital investment. Additionally, I've pulled significant profits out of it, but it still isn't allocation size. So my goal is to buy a position and keep adding to it in stages, but hopefully it will grow into its allocation size as opposed to me putting money into it to make it reach its allocation size. That brings us to the third tenet of my edge: time, or perhaps better thought of as time horizon. As a long-term investor, you can't allow yourself to get bogged down with what people are saying on YouTube channels about what's going on the next day or week or month or even year. You need to know for yourself what your time horizon is in advance. For me, for example, my time horizon is anywhere between 25 to 30 years. So during sell-offs or when I'm analyzing a position, one of the questions I ask myself is is this asset going to be worth more in 25 to 30 years? Asking myself that removes a lot of the stress and anxiety that comes from a market-wide sell-off. I'm not thinking about this as money that I need now or tomorrow or even in the next decade. This is money that's put to work for the next 25 to 30 years. It doesn't matter what happens in the short term as long as I'm maintaining my discipline and following my rules of patience. I hope this video helps you find your own investing edge. Please like and subscribe and watch my other videos for more tips on how to invest for the long term. Thank you for watching, and I'll see you in the next video.